Welcome to Informed Investor. So you know what's interesting? Big shots like Goldman Sachs, Morgan Stanley and Barclays are pretty pumped up about the Indian stock market for 2024. And this comes at a time when global economies remain in jeopardy amidst geopolitical issues, high inflation and elevated crude prices. But we see they're giving a thumbs up to Indian markets. Let's discuss this in detail. Morgan Stanley are painting a bull case scenario for India, giving it a 30% chance and saying the BSE Sensex could be at 86,000 by the end of 2024. Then you have got Goldman Sachs in the mix predicting the Nifty 50 index to hit 21,800 by the end of next year. That's like a 11% jump from where it is right now. These global rating agencies have just not been talking about it but also been taking action in their portfolios. Morgan Stanley has expressed confidence in the Indian market by upgrading it to a standout overweight status, considering it the most preferred emerging market. CLSA on the other hand has upgraded India to overweight and increased its allocation in the Indian portfolio. Similarly, Nomura, another global brokerage firm, has upgraded India from neutral to overweight. JP Morgan and Goldman Sachs has joined in by upgrading India to an overweight rating. While many global finance big shots have been optimistic about the Indian markets, here are some risks that they have pointed out. They have cautioned that a further rise in oil prices, especially about the $110 per barrel, could create macroeconomic headwinds. The upcoming general elections in April-May 2024 are expected to add volatility to the Indian markets. Despite these risks, in the current backdrop of global economic uncertainties, it is noteworthy that the prominent financial institutions are expressing a positive sentiment towards the Indian equity market. Despite some risks, India's got some solid fundamentals. That's what's keeping the optimism alive. The resilient macroeconomic indicators also evoke confidence of the economy, mitigating much of these risks. In a surprising turn of events, India's largest IT services company, Tata Consultancy Services or TCS, is expected to take a $125 million hit to its third quarter earnings due to a lawsuit filed in the United States. So, what is the allegation exactly? The lawsuit was filed by Epic Systems, which is a US-based healthcare software company, back in 2014. The allegation was that TCS stole Epic Systems' trade secrets and intellectual property and used those to develop its own healthcare management system software called MedMantra. So what is the final verdict? Following the lawsuit back in 2014, TCS was found guilty by a jury in 2016 and was penalized $940 million initially to be paid to Epic Systems. However, after TCS appealed to the US Supreme Court, it was lowered down to $140 million. So what is the impact on TCS? TCS, in a regulatory filing, mentioned that it intends to make the balance provision of approximately $125 million in its financial statements as an exceptional item for the third quarter of fiscal 2024. The lawsuit is seen as a temporary setback for TCS, especially at a time when the IT sector is experiencing a slowdown amid softening demand for IT services in major Western markets. Having said that, this is me, Ralison, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com